Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only, and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. The Australian dollar appears set for a lukewarm start ahead of today's Reserve Bank of Australia rate announcement. Every first Tuesday at the beginning of the month, the RBA holds its monetary policy meeting and announcement along with Governor Lowey's statement at 2:30. Considering the inflationary pressures, the central bank is expected to lift its interest rates for the second time in many months, with a broad range seen around 15 to 40 basis points. Now, with that being said, the rate stands at 0.35%, and with a 40 basis point favoured, would lock in a rise of 0.75 or 0.75% hike, that is. Looking at the pattern for the Australian dollar, the market is weaker and looking towards initial support, which comes in roughly around 71.45. I feel any weakness from there would find further strength towards 70.90. However, overall, the weaker play should see a rebound, and from that bottom side of 71.45 to 70.90 could see a retracement back to challenge the 72.60-65 60-day moving average and reassess from there. The euro at this stage is still a little bit mixed as the US dollar, which measures the greenback strength against a basket of 6 major currencies, rebounds back to 102.15 area. And that from there, the euro was a little bit weaker. Now, recently was calling this is possibly an inverse head and shoulders, but would need to see a break somewhere around the region of 108.45 to give a measured move up. It looks very unlikely, however, the pattern is there, so we've got to respect that. In the meantime, though, we could see a short-term pullback if the dollar does continue to increase, with all eyes on this week's CPI figures in the US, with the forecast estimates pointing to a further slowdown in May, with the CPI expected to ease to 8.2 and the core forecast to drop to 5.9. The US price index rose 8.3 in the year to April, and that is down from 8.5. So we are expecting a slightly weaker, and there is talk that we may have actually seen the CPI peak. But looking at the price pattern for the euro, let's see if the market does continue its downward trek and slowly edges lower before the rate decision from the European Central Bank later this week. The dollar yen story is still surging higher and still keeping me in a neutral bias. Now, the divergence that was there has been negated due to the overnight rally and breaking through that level that was around 131.60 and now looking to 132.30. We are extremely overbought, and I do feel eventually we should see a downturn, but at the moment the market is not displaying that kind of pattern. With the ADX trending, could see further upside test. Let's see if 132.30 is reached. Sterling still a little bit lackluster as the market still maintains in a sideways pattern and still respecting the support area seen around 124.15 to 124.65. If we see a break above that top side, which is around, we get a value of that, which is now seen roughly around 125.90, allowing a little bit of slippage, then we could see a further up test towards 126 to 127, which is in favor as the technical pattern still in a prime position to stage a rally. Sterling Kiwi rebounds as the market respects the level of 191 figure 30 and now reaching its topside target around 193. In light of the pattern, let's see how the market plays into today. And if we do see a little bit of weakness come back in, we should see another down challenge on this 191 region. Gold was weaker overnight as anticipated. The market is still somewhat struggling to recapture the momentum up towards 1,880 and instead is looking down towards the bottom side of the range, which is around 1,838 to 1,825 to 27 and may see some profit taking or demand returning from this bottom side of the range. We've got a hanging man posted after the topside challenge for oil. That was around 118.50.90. This is the second time this market's retreated from this area and now trading around 117. In light of the pattern, we still need a little bit more downside confirmation to support any bearish case, and keeping an eye on these indicators. And a break of 115.40 could reopen the downside back to 109 or even down to 106. So keep an eye on this pattern. As a recent rejection did see a very significant or some point of a downturn, and this pattern could be repeated if this hanging man is true from the break of 115.40 confirmation. Well, that wraps it for the morning. Thank you very much for joining me. As always, look out for the interest report and also the end of the day wrap.